To our market experts this hour, kicking off the show, Barry James, James Advantage Funds CEO, and Tom Hayes. Barry, let me start with you. What are you watching closely this week? Is it the Fed and inflation, or is it the banks?
I think the big thing driving the market is going to be interest rates. To be honest, we look at the first quarter. The play between value and growth. It was higher interest rates. And value dominated 11 to 1% comparison. In the second quarter, interest rates fell. Growth took over 11 to 5%. So that's what I think the market's focused on. It's not worried about the Fed making a change or anything of that nature. It's just playing that game. It's like the greyhounds racing after the rabbit. They're going after one or the other, and I think that's kind of on people's minds right now.
Mm-hmm. The 10-year yield, Tom, it's kind of parked right now at 1.3%. That obviously affects the bank and how much money they can make on loans. I look at the banks and I look at, oh wow, they just passed the stress test with flying colors, but with rates so low, I mean, what do you expect from the banks when they start reporting tomorrow?
Yeah, well, Lauren, the negatives are that trading revenue is going to be down about 28% across the board. Commercial loan demand is down about 3%, so loan demand has not been as robust as we expect. The good news is that the stimulus is rolling off, so loan demand is going to pick up. We've seen the Big Six increase dividends by about 40% on balance. Investment banking revenues up 30%. Think deals and SPACs. Everyone and their mother now has a SPAC. And we're going to see some more reserve releases. We saw $14 billion last quarter. We'll probably see $8 to $10 billion. So I think there's a trade there with the KBW Bank Index down 8% in the last month and Citibank down 13% on rates lowering and people's fears about net interest margin. I think that's a temporary short-term issue. You've got Citibank trading at 0.9 times tangible book value, trading at 8.6 times next year's earnings, and a turnaround story with the new CEO, Jane Fraser, moving forward. She's taking the efficiency ratio down by 10%. She's streamlining operations, so we think there may be some opportunity there after earnings.
Okay, so Tom is talking about Citi being at a potential breakout point now, and also this being a buying opportunity for the banks with the KBW down 8% on the month. Do you agree, Barry?
The financials, I think, are going to be still in kind of a pause area. People will be looking at the earnings that are coming out, and they're so high, the expectations are. It's kind of like, a string on a knit sweater. You start pulling it, and things get revealed that you don't want to have revealed. And that can be, the costs that are associated, the material costs, the people costs, and, disruptions in the supply chain. So banks are in a little bit different category than that. They are dependent on interest rates, and low interest rates generally are very, very helpful because of the spread to the banks. And we like them. We like, Goldman, and we like JP Morgan. So we have them in our Golden Rainbow Fund. So we think the banks are a pretty good place to be.
All right. Well, we'll see what those two say tomorrow and their outlooks for the year. Barry James, Tom Hayes, thank you very much.
Thanks, Lauren.
So space, the